Boys and girls, the big question on everybody's minds with a market like today is, will crypto actually save us from impending doom? Don't go anywhere. Welcome back to the channel. Hit that subscribe button, make it explode. Then click the bell icon so you're notified when new media comes out from the channel. Appreciate your support. We crossed 16,000 subscribers on this channel, and it looks like we are definitely starting a secondary channel or potentially moving homes from this channel to a different channel. Stay tuned in the coming days and weeks. Without further ado, let's jump straight into the market analysis. This is the Fear and Greed Index from yesterday. From yesterday, and I wanted to show you this before I refresh the page. See right here says next update will happen in 0 hours and 0 seconds and 0 minutes, 0 seconds. Let's go ahead and refresh that. Score of 32. The updated score is 20. Why did I want to do that? Yes, for shock value. Could I have seen it coming? Yes, obviously. Anybody could. We had one of the deepest red candle days that we've seen in weeks today. And so just wanted to illustrate how that moves the sentiment, right? Yes, sentiment moves markets, but markets also move sentiment. We're pretty reactive people, actually, pretty reactive creatures, human beings. So usually when the market dips, when price action goes negative, so does sentiment. This is measured on Twitter and on Reddit. But here's the chart, okay? I'm on tradingview.com. No need for a referral link. This is a free tool that I use. It's free for anybody to use. We have what looks like a recovery candle right there coming in right now, being measured right now. Looks green. Looks like a little hatchet handle right there, little hatchet head right there. So there's a possibility that we will see a reversal, and we will see on the MACD here a sort of a growing convergence towards a convergence event. Maybe we will see it flip bullish again. But in the meantime, we talked about it the last time that I uploaded. We showed this brand new trend with the chopsticks moving in a downward channel. Here we are breaking out of that expected channel to the downside and moving firmly into that DCA territory, that sort of value buy territory. Could it go lower? Absolutely, it could. We've been talking about that possibility for months. So while I say that, usually the fear and greed index is a counter indicator. Usually I would say if we're all the way into the fear side of the fear and greed index, that it's a great time to consider setting up your DCAs, or at least setting up your targets, figuring out whether or not you want to value average in, or whether or not you want to just like try to buy some of these juicy dips on these very heavy red candle days. Some people would say that right now is the perfect time to pick up a little bit of Bitcoin and other cryptocurrencies, altcoins that you feel strongly about. I'm going to say that I urge caution, and there's a reason for that. We're going to go over a couple articles that I think maybe warrant a little bit of extra caution right now. This is not a typical market, so, buyer beware. That said, do I offer legal, financial, business, investing, self-defense, or firearms advice? No, I don't. Though there is a lot of news across all those different sectors in the market. I don't offer any of that kind of advice. If you think that, well, here's a little disclaimer, guys. That's not what I offer. That's not what you should be coming to this channel to get. Not a financial advisor, not a CPA, and you haven't retained my services. Most importantly, you haven't paid me to give you an opinion. So that's part of how that works. Okay, so just wanted to throw it out there. The chart is printing a green candle as we speak, so perhaps by the end of this segment we'll be able to see a slight bit of recovery, slight bit of relief. But I think that right now this channel is probably going to hold for a while. Let's take a look at some of the news, though. That's what's going to help us figure out whether or not things are going to turn out in our favor. All right, first bit of news from Crypto Potato, and this is actually a little bit older. It's from a couple of days ago. It says B of A came out basically saying that crypto outperformed stocks, or can outperform stocks in the midst of what could be a Fed-propelled recession, right? Obviously, we know that the Fed has been printing money for quite a while now, since lockdown started. And so having so many fresh dollars basically printed out of thin air, it can't possibly be without consequence, right? Like, this is logic, pretty logical assumption for anybody to come to, looking at the way the Fed has been printing money over the last couple of years. You don't have to be an economist to just say, well, if you're printing a bunch of money that isn't backed by anything, then the value of that money has got to go lower, right? Eventually, it has to happen. Well, we're starting to see signs of that now. Yes, the the office of the President of the United States and the Fed, all the spokespersons who speak on behalf of these entities have been saying like, oh yeah, expect like, whatever, 7.9% inflation. I think Jerome Powell also has gone on record as saying it's 7.9%, the inflation rate. But then we're also seeing the price of goods in the market go up anywhere from 20 to, in the case of used cars, the used car market, this crazy oddball market going up by 42%. Why would used cars go up by 42% when they're saying the inflation rate has gone up by just under 8%, right? There's a disconnect is what I'm saying. So we may not be getting all the facts here. We may not have enough information to make a really solid decision about anything moving forward. But here's kind of the soundbite that I wanted to get to from this article. It says the bank's U-turn regarding cryptocurrencies because Bank of America, even though it was fairly pro-crypto for a number of years, none of the banks, none of the traditional finance institutions have been particularly bullish on cryptocurrencies or Bitcoin. They've always been a little bit cautious, at least, if not outright hostile, right, aggressive towards cryptocurrencies. But these guys at Bank of America have changed their minds. What made the change? Well, their U-turn happened last year in October after bashing Bitcoin, saying that, they called Bitcoin important and referred to the whole industry as too large to ignore. So I think they're right. It is too large to ignore, but how that plays out is anyone's guess. Over on Daily Hodl, there are a couple of analysts who were featured on the CTO Larson channel, and I don't know that I agree with their assessment, but they say that it could be that a certain sector of the altcoin market will be destroyed once regulation hits, and they're saying that it will be the privacy coin market. They're saying that for privacy coins to succeed, they have to have institutional money. And the quote is from his guest, I know the people out there in the audience believe that things like VCs are bad, but if VCs are bad, there would never be anything like Microsoft or Hewlett Packard or Google or Facebook or Tesla or SpaceX. This is the classic sign of somebody who is 100% out of touch with the ethos of blockchain and cryptocurrency, let alone Bitcoin, right? And coins like Monero that were designed by people who did not have a financial motive in mind initially. They just wanted to retain privacy at any cost. It also is informed by the free and open source software movement. So when people make statements like this, that's like asking, okay, well, how many VCs had to create the Creative Commons licensing that Lawrence Lessig was instrumental in getting pushed into open source software? Well, none. There are no VCs that funded the creation of the Creative Commons licensing scheme, right? There are no VCs that created the MIT license per se. And for as long as that exists, there's always going to be some kind of value that's transferred, tremendous value that's transferred in the form of the free speech, the code base itself that is not monetized and did not require an injection of VC capital or some angel investor to say, hey, here you go, like C-Town, right? Phenomenal work that they do out there, don't get me wrong. Central Texas Angel Network, they do great work. But generally speaking, when it comes to open source software, they're just not needed. It's just, there's not a good history of there being a need for angel or VC investment. So I just think this person is totally wrong. I think they're way off base. I think they're way out of touch. It's really that simple. But their problem is, right, like looking at the tokenomics of Secret Token. I wouldn't touch it no matter, no max supply, very little distribution. Talking about, these other coins like Haven and like Pirate Chain and like Monero, and basically complaining that it doesn't have enough VC or institutional money in it. Well, sorry guys, I don't know what to tell you other than that it's free. It's free as in speech, not free as in beer, right? You're thinking about the way that VCs draw people into a space by giving them free beer, right? Giving them a helicopter freebie, airdrops here, airdrops there. Allocate a certain portion of the coin supply and then inject on your initial bootstrapping liquidity event, inject so much capital that you then are able to wash trade your own tokens up to recoup your investment up front. It doesn't work like that, guys. That's not how freedom movements actually work. So anyway, just guys, go to a meetup, talk to somebody in the space, because you just seem out of touch when you say stuff like that. Not CTO Larson, but these guys who he had on the show. Just doesn't match my experience of crypto. Also from CoinDesk, Meta starts building a digital economy for creators in Horizon worlds. You might be saying, Seth, why in the world are you covering this? Well, because we want to keep our friends close and we want to keep Facebook much closer, right? This is Facebook we're talking about. We need to know what they're getting into, right? So apparently they're starting a digital economy. Are they actual NFTs? Is it actually based on a blockchain? Obviously not. So a handful of creators will be able to sell virtual items and effects in their respective worlds. Meta said only Americans and Canadians above the age of 18 will be able to purchase those items. So they're rolling out the sales ability to a very small group, and then they're rolling out the purchasing ability to a much smaller, or well, I guess to certain territories that are qualified buyers, right? Because they have their money is good. They're in Meta's little metaverse. All right. Last bit of news that I wanted to cover with you before we take a look at just briefly at some of our markets as well is from Cointelegraph, talking about how ETH developers are implementing the first ever shadow fork as proof of stake testing continues. Here's kind of the quotable quote here. The number of staked ETH on Ethereum's Beacon chain is fast approaching not 10.9 billion, but 10.9 million Ethereum. That comes out to about $32 billion worth of value locked just in the staking contracts. That does not have to do with EIP 1559 burning of any kind of funds in Ethereum, and that does bring the number up even higher. Shout out to Crypto Wendio, and who had my little segment on her show as well, talking about how that number is going up. It's nearing almost $40 billion of total value that is either burned or locked in staking contracts, it actually does bode well for the tokenomics of Ethereum. I realize that this is me talking out of both sides of my mouth, but here's what I'm excited about the EVM ecosystem. You do have privacy as a primitive when you look at some of the foundational technologies like zk snark enabled smart contracts in Tornado Cash and other products like that. So I do think that there's a bit of privacy that we're able to claw back using Solidity and EVM based systems. You tell me in the comment section what you think about that. I'm pretty bullish on it. I think it's a really great step in the right direction. It's not perfect and it's not private by default, but it does offer privacy that is sorely lacking in most public ledger systems, distributed ledger systems like Bitcoin and Ethereum. Again, not here to get into a flame war or debate about which one's better or more decentralized, just to say I think that actually bodes well. One final thing before I let you go, guys. First off, not advice, but over on DeFi Llama, Ethereum has regained a tiny bit of dominance. I think that those narratives are actually helping play out, and especially as we see that markets become a little bit averse, when we see big, heavy red candle days like we've seen before, there is a flight to safety, and Ethereum continues to offer that. So take that for what it's worth, guys. The market, its actions speak louder than these guys' words, right? So plan accordingly. Profits for GPUs, I also want to mention, are down, right? There's the top of the line from Nvidia down to almost under $4. So it's becoming decreasingly profitable, but part of that has to do with the increased competition. All right, guys, that's quite a bit for today's episode. Let me know what you think down in the comment section to the central question over here. Will crypto save us? Is it enough to help us get out of the sticky situation of rising costs for goods and services? Because clearly what we've been told about 7.9% inflation of US dollars is, well, on the street, that's not what we're experiencing. But can crypto actually do what we need it to do? Will there be a problem? Will there be a flight away from Bitcoin and other traditionally, hard assets within the cryptocurrency industry? Will it be enough, or is it too little, too late? Tell me in the comment section, guys. Appreciate you watching to the end. I'll see you in the next one. Thanks for watching all the way to the end of the video. Remember to check out mineyour.biz, where you can sign up for Mine Your Biz Insiders, our occasional newsletter where we don't spam you, but we do send out occasional important information, including flash sales and important deals on privacy-preserving technology. This is one of the ways that we can talk to you without censorship and without the oversight of third-party media platforms. You can also check out the new Mine Your Biz phone, as well as merch, or sign up to become an affiliate for anything sold directly on the mineyour.biz website. You can earn a percentage of anything that we sell. Thanks for watching all the way to the end of the video. You're the reason I make this media. I love your face. Remember to stay private and mind your biz.